The FHSA, the First Home Savings Account, is probably the best account that's been introduced to Canada for a while now for first-time homebuyers. It's like the RRSP and the TFSA had a baby, and its sole purpose was to help you get a house. This is not financial advice, this is for educational purposes only. Every year, you get $8,000 of contribution room from the moment that you open it. You can carry up to $8,000 of contribution room over to the next year. There is a lifetime contribution of $40,000. Any of these contributions made to the FHSA are a tax-deductible event. Every time that you max out the FHSA, that is a tax-deductible contribution, which would generate approximately a $2,000 tax refund. It will grow tax-free, and the withdrawals are tax-free as long as it's used to buy an eligible home. But then there's the catch. Once you open this account, you start a 15-year countdown that you need to use this or you lose all the benefits of the FHSA. If you don't use the account in the first 15 years to buy a home, you'll either be taxed on it or you have the option to roll over the money you have built up in your FHSA to your RRSP without using any of your RRSP's contribution room. When purchasing a home, this withdrawal is only tax-free if it's a qualifying purchases. So that means everything has gone well within the withdrawal period. So you need to be very careful when doing the withdrawal. If pulled out incorrectly or if something does not go right during the purchase, you will be taxed on the purchase. Of course, you need to be 18 and a Canadian resident. And most importantly, you could not have owned or lived in a home that you own in the last 5 years. So if you bought a home 10 years ago, sold it, and it's been more than 5 years since you lived in that home, you would qualify to open up that FHSA. But keep in mind, if you or your partner owned or lived in a home that they owned in the last 5 years, you would disqualify your partner from being eligible for opening up an FHSA. Open up the FHSA when you know you have a set timeline that you are going to buy a home. It's a great account, it's a powerful tool, just know the rules and how to use it correctly.